Welcome everyone to Charts Focus 1, where we teach you how to work hard and trade smart. So, we have a huge week ahead of us with big tech earnings coming out later on this week, plus a plethora of smaller growth software companies reporting all the way up into the first week of May. So what does this mean? Well, number one, we will get an injection of volume. Number two, we will also get an injection of volatility. So why do those two things matter right now? Well, because of the fact that the market has been in a deadlock. So if you guys haven't been living under a rock, you guys should know that we have been stuck in a chop zone. And where is this chop zone? Well, you guys should know that we've been seeing a huge level of support at 406 and a huge level of resistance at 414.50. How did I get this these two levels here? Well, take a look in the past. Early February to mid-February, we saw this choppiness going on between 406 to 414.50. Now, before I delve in further, I want to give you guys a new resistance area, and that is between 414.50 to 415.50. So last week we made a new high, right? And this new high was somewhere around 415.50 as the highs of Tuesday from last week was 415.72. And the only reason why I made this level here is that, well, back in early February to mid-February, we have retested this level or at least gone up close to it. And we've seen the price completely get rejected at this area. So instead of having just one maximum level on this choppy area or chop zone, make sure to look at 414.50 to 415.50, a nice $1 price range as our supply area. So again, in order for us to break over and have a nice big uptrend move to the upside, since we've been making a textbook higher highs and higher lows uptrend, we need to break over and stay over the supply area between 414.50 to 415.50. And again, the maximum price target for SPY is going to be 420. All right, now before I go into the intraday time frames, I have to remind you guys, okay, back in early February to mid-February, what do we have? A textbook downtrend that consisted of lower highs and lower lows, which ultimately broke further to the downside. And we have yet to see currently a break to the upside. So the market can potentially use the big tech earnings as a catalyst to break over to the upside and have a nice big impulsive move to the upside or a big gap up to the upside. Whatever it may be, I just want to see a continuation of this nice textbook uptrend of higher highs and higher lows. So obviously this week is definitely going to be a make or break type of week where we can see a break to the upside, okay, or a break to the downside where we start to make a nice potential reversal to the downside. All right, so last week was definitely a deadlock type of week where we were just really getting tight and tight and tight until we formed this nice coiling price action that ultimately gave us a wedge chart pattern. And so come Monday, I hopefully can see a break of this wedge chart pattern, and especially to the upside, since I am bullish based on what we just saw on the daily time frame with the higher highs and higher lows textbook uptrend. So in order for us to break out of this wedge chart pattern, I want us to break over 413. So this is a critical level of resistance that we weren't able to come back to after breaking below it last Thursday. Now, again, a wedge chart pattern can still provide us with a break to the downside because it's a neutral chart pattern. It's not inherently bullish or bearish. Again, it's not inherently bullish or bearish. So it can give us two opportunities to either go to the long side or to the short side. But if we start to continue to break to the downside as we've been making lower highs and lower lows, we can definitely break this wedge chart pattern, make a new low, and potentially bounce at a significant area of support as highlighted here with this rectangular green box between 409 to 409.50, a nice tiny 0.50 range or 50-cent range. So again, we have these very, very tight levels where we are seeing very tight consolidation and coiling of the price action near these significant levels. So again, we need to wait and be patient for the price to actually break these significant levels. Now, if you guys are bearish and you guys are waiting for a break to the downside, look for a break below 411.50, which will ultimately give us a nice break to the downside and a potential revisit of this 50-cent tight range between 409 to 409.50. All right, so with that in mind, if we do break over 413 and if we have a nice bullish reaction to all the big tech earnings, I expect us to have another higher high compared to last week's high of 415.72, and we can very well be on our way to the maximum price target of 420 on SPY. Okay, now let's do something a little bit different here. Let's take a look at QQQ. So as you guys should know by now, we have been seeing some incredible strength on QQQ since the start of this year. And apologies about all the levels here because again, TradingView coincides intraday levels back onto the bigger time frames like the daily and the weekly. So don't get too distracted here. So again, back in early February to very early March, we had a huge bounce. And this is where in early March to mid-March, we saw that strength in tech coming in. And we saw that nice breakout back to the upside. And if you take a look at SPY and you compare it to QQQ, SPY's dip in March was a lot larger and a lot longer as well because SPY decided to break out near the end of March rather than QQQ, okay, which had a huge breakout very early on, right smack in the middle of March. And we had a continuation to the upside all the way up into the end of March and into early April. And now, since April started, we have been seeing a very textbook consolidation base or even a textbook bull flag where we have a flat top and a flat bottom. So this is QQQ's chop range between 313 to 321.50. Again, 313 to 321.50. So it's a very wide range, just like in SPY, but we're getting very, very tight. And so on QQQ, we have the daily 21 SMA already caught up with the price. So depending on how big tech earnings go, we can see a break to the upside and a potentially another third retest of 321.50 since we have gotten the first retest here and then a second retest here and potentially a third retest somewhere around here that could potentially give us that nice breakout to the upside, officially confirming that this consolidation was indeed a bull flag, right? So if you go on the 2-hour time frame, again, it looks very similar to SPY. We've been making nice intraday lower highs and lower lows, giving us some very tight consolidation. And I love the fact, again, that we are still staying within the chop zone between 313 to 321.50. Now, if you go on the 2-hour time frame, you guys can be a little bit more specific on the support area here. So you guys can use 312.50 as your intraday level of support. But again, if we start to see a dip before big tech earnings come out, we can revisit this 312.50 to 313 support area, just like I told you guys about SPY. This 409 to 409.50 tight support range. Okay, so make sure you guys remember this for QQQ. Now, the only way that we can see any type of an upside move in QQQ on the intraday time frame is a break over 318.50 right over here. And so if we're able to break over 318.50 and hold over 318.50, we should be able to get a nice retest of 321.50, which will give us that nice third retest on the daily time frame as I've explained a few minutes ago. Now, the reason why I'm looking at 318.50 is that, well, last week we were definitely not able to hold over 318.50, which tells me that there are a lot of sellers pushing the price down every single time the price wants to get back over 318.50 and have a chance to get back to 321.50. Okay, so that is the overall market insights that you guys should be looking at for SPY and QQQ. Let's take a look at our first name this week. Toast or Tost, T-O-S-T. So this is a nice tech company that has been absolutely dismantled from IPO highs. And where was IPO highs? Well, it hit an all-time high of $69.93. But guess what? We're back down to the teens. So on the weekly time frame, all right, things look pretty bad because on the weekly time frame, we're making this bearish flag. We have the flagpole here. This nice impulsive move down is what created this flagpole. And then we have this consolidation range between $16.50 to $18, which is currently making the flag. But I am bullish on this name for this week. Why? Well, first of all, as I said earlier when the video started, we have smaller growth software companies reporting all the way up into early May or the first week of May. And this one is definitely going to be reporting in the early weeks of May. And so I want to use that as a catalyst. So what that means is that I want to get in for a potential run up into earnings. So I'm going to use earnings as a catalyst for a potential run up into earnings because people tend to buy going up into earnings and then they sell right before earnings. That is a typical pattern. And I love the fact right now also that TOST is at a very pivotal area. So we've been going higher highs and higher lows and riding the 10 SMA and the 21 SMA after we saw a nice short-term bullish indication right over here as the 10 SMA crossed over the 21 SMA. And this makes sense to me to be bullish short-term. And if we break over $18, this level of resistance, we should get a nice impulsive run up back to maybe even the 20s. However, there is a huge area of supply that we need to be looking at. And what is that? Well, the daily 50 and the daily 200. So we have officially made a death cross where we have the 50 SMA crossing below this larger 200 SMA. And that means in the longer term perspective, the potential price trend has a lot more downside left. So that is our huge upside potential risks, as if we do break over $18 this week, we can see the 50 and the 200 SMAs acting as a caveat for more moves to the upside. And so again, I'm going to be optimistic with this one as it has been a very lagging tech name for most of this year, as obviously it did have the benefits of, or it was a beneficiary of the early run up in January to February. However, it completely wiped out the January to February gains, and we're right back to the lows that we have been seeing since last year back in October. So again, make sure to look out for a break over $18.10 as your confirmation entry point, or if you guys really want to wait it out, look for any whole number entry price over the daily 200 and the daily 50 SMA. Okay. All right, our second name here is MBLY, or Mobileye Global. So this one has been a very successful name ever since we looked at this one at the start of this year. So we got in at the break of these new highs. And it was a very, very fun name to swing. But ultimately, personally, I wasn't able to capture in all these gains here due to the fact that we are still very uneasy about the current market conditions coming from that 2022 market performance into a new fiscal year, which was 2023, or which is 2023. So Mobileye here is definitely looking really good on the daily time frame. Why? Well, we've been making higher highs and higher lows ever since it IPO'd, right? We haven't seen this IPO crater to the downside or being cratered by shorts, which is completely different to TOST. So MBLY definitely has that momentum left, that IPO momentum to the bull side. And currently, we're making this very large macro ascending triangle chart pattern. However, I had to let you guys know this. Ascending triangle chart patterns have a very, very low probability of actually breaking to the upside because, again, it's an inherently bullish chart pattern. And also, if we take a look on the weekly time frame, the price looks a little bit overbought or overextended. Now, I can check the RSI, and we are definitely near that value of 70, right? So we are a little bit staying near those overbought levels. But even if I take out the RSI, I can tell that the price is a bit overextended as we've been going straight up without any significant moves or trends to the downside. So potentially this ascending triangle chart pattern on the weekly and on the daily, as you guys can clearly see here, can potentially provide sellers, short sellers, a reason to break this to the downside. And so as another software name, Mobileye will be reporting this Thursday. Okay, so depending on how earnings report goes here, and depending on how the reaction is to that earnings report, we can potentially see new all-time highs, or we can see a complete gap down back to the 30s here. Okay, so make sure you guys watch out for a long entry. I don't know why I said long bounce at $42.10, but if we do come back down, actually, let me keep this. So if we do come back down to this ascending level of support, which is currently around this $42 area, right? If you can actually imagine where the price could be going, we can see another good bounce at this ascending level of support. How do we know this? Well, it's backed by months of data points here, where we've bounced at this ascending level of support. So the same thing happened last time, then the same thing can happen again in the future. So $42 can be potentially a very nice support area to buy or go long on this name. Now, for a potential break to the upside will be, okay, over $45. Why? Well, we have this level of resistance here. So this flat top is what's creating this ascending triangle chart pattern. However, we could also be seeing a potential wedge. That's right. We could be potentially seeing a wedge chart pattern. Now, this will ultimately be validated once we get another retest at this descending level of resistance. But so far, all we know is that we are somehow seeing this trend line being formed due to the fact that we had this two pivot high points at $48.11, which is the all-time high number, and at this second pivot high point at $46.94. So depending on how we break over 45, or if we don't break over 45, okay, I want to see another third retest around, I would say, 46 and then another rejection for potential confirmation of this descending level of resistance, which will also confirm that we have this macro wedge chart pattern forming on the daily and on the weekly. Okay, now our third name here is LABU. So hopefully you guys read the market summary, but you guys should know why I'm looking at this one here. So LABU, the 3 times leveraged ETF for the biotech sector. We're definitely coming back to this one because we started to bounce higher with a good amount of volume. So with the nice close over the daily 50 SMA, this tells me that there is strength in this current sector, as I've also shown you guys in the market summary. In the overall healthcare and biotech sector, we've been seeing some strength. And LABU here is a very cheap name compared to, let's say, XBI, which is kind of the overall biotech sector. Okay, and that's around $82 per share. LABU provides a very low barrier of entry. So LABU, and it's also a leverage name as well, so it is a lot higher risk, but again, it's very, very cheap share price wise. And so right now, technically, on the technical chart here on the daily time frame, we have been moving sideways, just like with every other market that we're seeing right now, and every other sector. So LABU has been creating a very, very nice daily support level at $5.60. But again, if you guys just want to keep the whole number levels, $5.50 is also fine as well. But I just want to be a little bit more accurate on this one. Okay, so $5.60 is currently where the price is forming this nice support level. And then at the top, we have this major level of resistance at $6.09. So this resistance level was formed last Wednesday at the highs, this weekly high of $6.09. So if we're able to break the previous highs of last week, we should be able to see a continuation to the upside, which is the reason why I gave you guys the confirmation entry point over $6.10. And if we're able to break over that, then we will most definitely head back to the next whole number level of $7, or specifically $7.10. Okay, so very, very simple here. Now, the only thing is LABU, or the entire biotech sector, needs a little bit more consolidation days, or even maybe the next week or even next 2 weeks. So LABU and XBI, they both need some more time to consolidate, as they have seen a nice burst to the upside since their March lows. All right, now for our last but not least name for this week, let's take a look at AMD. So AMD, as you guys already know, or should know by now, since I've been talking about this in the CFO Discord, this one has been making a very, very nice textbook bull pennant flag. So this is the flagpole, this nice impulsive move to the upside, and then this downward trending consolidation that has created the flag. So this plus this creates a nice bull flag, or specifically a bull pennant flag. Now, what I like about AMD here is that we are also sitting at a very pivotal area, and that is my daily 50 SMA. That's right. So AMD has been consolidating and ultimately reached a very heavy level of support, which is the daily 50 SMA. And I love the fact that we've been staying above the daily 50 SMA ever since we have reconquered and reclaimed over the daily 50 SMA earlier this year. And I love the fact that we have also gotten a golden cross, which gives us a nice stamp of approval for the long-term perspective, or long-term bulls. And that's the reason why AMD, I'm still looking at a nice long-term entry if we're able to hold over continuously this daily 50 SMA and ultimately break over $89. So if you're able to bounce over $89 this week, I want us to have a nice accumulating time, or happy time here at $89 as we continue to pile into this name as bulls and wait until we get that nice break over this $90 whole number level. And why do I say $90? Well, that's kind of the general area where I hopefully we can see a nice break over this descending level of resistance that is a part of that macro bullish or bull pennant bull flag. Okay, so now the only thing that's kind of acting as a caveat here are the short-term SMAs. So we have the 10 and the 21 SMA now officially acting as a level or area of resistance. Now, I'm not going to take too much attention or pay too much attention to these two short-term SMAs because again, AMD has been making higher highs and higher lows for quite some time. And we've been repeating this pattern where we go up, consolidate, go up, consolidate, go up, and consolidate. So this is our, I would say, official third time. So one right here, second time right over here, and then our third time right over here. Now, there is a high chance and high probability that this might not work out a third time. But again, we're just going to go with what has been working so far for this name. And that has been this specific pattern, higher highs and higher lows with a nice side of consolidation. So AMD also has earnings coming up, okay, in the first week of May. So make sure you guys remember that because again, you guys can potentially use earnings as a catalyst. How? By getting in before earnings and riding all the way up into earnings and taking profits right before earnings, just like how I told you guys with Toast or TOST. Okay, and you guys can also do that with Mobileye. All right, so that is it for this video. I know this video was a little bit long. It's kind of hitting that 30-minute mark soon. But if this technical analysis video was insightful, make sure you leave a like down below. And if you aren't subscribed yet, I don't know why you wouldn't be, make sure you hit that subscribe button and the notification bell so that you guys know when I post videos and when I am live. Good luck, and I'll see you all tomorrow in the morning live stream.